The world's wealthiest insurance dynasties built their empires by calculating the exact monetary value of human suffering. They transformed tragedy into profit margins, turning disasters into dividends with a precision that would make medieval moneylenders blush. These families didn't just insure ships and cargo. They insured human lives, calculated the worth of limbs, and profited from catastrophes that destroyed entire communities. Their ledgers recorded not just financial transactions, but the systematic commodification of human mortality itself. Number 10. The Phoenix Assurance Dynasty. Founded in 1782, Phoenix Assurance grew wealthy by insuring London's most dangerous properties while simultaneously investing in the very industries that made them hazardous. The company's founders realized that fire insurance became monumentally profitable when you also owned shares in the poorly constructed tenements and dangerous factories you insured. When these buildings inevitably burned down, Phoenix collected premiums for years beforehand, paid out minimal claims due to policy loopholes, then purchased the scorched land at rock-bottom prices. The cycle repeated endlessly, with each disaster feeding their expanding empire built on calculated urban misery. 9. The German Fire Insurance Cartel. In 1853, a consortium of German insurance families formed an illegal cartel that controlled fire coverage across the Germanic states. They divided territories like feudal lords, fixed premium prices, and most disturbingly, maintained detailed records of which buildings they hoped would burn. These records, discovered in 1943, revealed that the cartel actively delayed firefighting efforts in certain districts to maximize their rebuilding profits. Families paid premiums for decades, only to watch their homes burn, while insured firefighting companies mysteriously arrived too late. The cartel accumulated wealth by engineering the very disasters they claimed to protect against. Number 8. The Slave Ship Insurance Networks. British maritime insurance syndicates in the 18th century developed specialized policies for slave ships that treated human cargo as livestock. Lloyd's of London pioneered actuarial tables, calculating the expected death rates during Middle Passage voyages, with premiums adjusted based on anticipated mortality percentages. Ship captains could collect insurance payouts for slaves who died during transport, creating perverse incentives to maximize profit through deliberate neglect. The Gregson slave ship case of 1783 revealed that 132 enslaved Africans were thrown overboard to collect insurance money, legally treated as jettisoned cargo rather than murder. 7. The Prussian Military Insurance Empire. Prussian insurance magnate Friedrich von Zeckendorf created Europe's first military life insurance system in 1756, selling policies to soldiers' families, while secretly providing intelligence to enemy forces. Von Zeckendorf realized that by insuring soldiers' lives and simultaneously selling troop movement information to opposing armies, he could increase casualty rates and maximize insurance payouts to grieving families while collecting fees from both sides. His network of agents operated across European battlefields, turning warfare into a profitable insurance scheme. Military families paid premiums believing they were protecting their loved ones, unaware their premiums funded the very espionage that endangered them. Number 6. The American Industrial Accident Syndicate. In 1880s America, a syndicate of insurance families led by the Fairfax dynasty cornered the market on industrial accident coverage by bribing factory inspectors to ignore safety violations. Workers paid into company insurance funds believing they were protected, but claims were systematically denied through fabricated evidence and corrupt medical examiners. The Fairfax Syndicate accumulated vast wealth by collecting premiums from workers in dangerous industries, while ensuring that injury claims were rejected through their network of paid officials. Factory owners participated willingly, knowing their insurance costs remained low, while worker safety remained deliberately compromised. But before we continue, you need to know about the insurance dynasty that turned the Irish potato famine into their greatest profit opportunity. 5. The Mumbai Cotton Fire Conspiracy. The Tata Insurance Network in 1860s Mumbai orchestrated a series of cotton warehouse fires to manipulate global cotton prices during the American Civil War. With American cotton supplies disrupted, Indian cotton became extraordinarily valuable, but existing stockpiles kept prices stable. The Tata network insured these warehouses, then arranged for systematic fires that destroyed competitors' cotton, while their own mysteriously survived. Each fire increased the value of remaining cotton stocks while generating insurance payouts from destroyed inventory. They transformed Mumbai's cotton district into a theater of profitable destruction, timing fires to maximize both insurance claims and commodity speculation profits. Before, the Venetian maritime murder insurance. Venetian merchant families in the 14th century created the predecessor to modern life insurance by offering policies on sea captains and rival merchants, then arranging their murders during voyages. The Dandolo and Morosini families perfected this system by insuring valuable individuals, then hiring pirates from their own fleets to eliminate them during supposedly random attacks. Maritime records from 1387 reveal that certain shipping routes had mysteriously high mortality rates among insured captains, while uninsured merchants traveled the same waters safely. These families accumulated enormous wealth by selling protection they never intended to provide, turning the Mediterranean into their private hunting ground. The 3. The London Cholera Profiteers. During London's 1854 cholera outbreak, the Westminster Insurance Consortium sold health policies to poor families, while secretly contaminating water supplies in insured districts to accelerate death rates. Led by the Pemberton family, this network maintained detailed maps showing which neighborhoods received clean water and which received deliberately contaminated supplies. They collected premiums from desperate families, then ensured those families would die quickly to minimize payout periods. Dr. John Snow's famous cholera mapping inadvertently revealed the consortium's contamination patterns, but the evidence was suppressed until 1953. The Pembertons turned disease into their most profitable enterprise, killing their own customers to maximize returns. 2. The Railroad Massacre. Insurance empire. The American railroad insurance empire of the 1870s, dominated by the Huntington and Stanford families, deliberately caused train accidents to collect massive insurance payouts while eliminating competition. They insured both their own railways and competing lines, then sabotaged rival trains through strategic track damage and signal manipulation. Passenger trains carrying competitors' cargo mysteriously derailed with disturbing frequency, while Huntington-owned cargo traveled safely on parallel routes. Internal documents revealed detailed sabotage schedules coordinated with insurance policy renewals. They transformed America's expanding railway network into a systematic killing machine designed to eliminate business rivals while generating insurance profits from the resulting carnage. 1. The Irish Famine Insurance Holocaust. The most monstrous insurance fortune was built on the Irish potato famine by English landlord insurance syndicates who deliberately prolonged the crisis to maximize their returns. Led by the Trevelyan financial network, these families insured Irish tenant farmers' lives and crops, then systematically prevented food relief from reaching Ireland while continuing to export grain to England. They maintained detailed actuarial tables, predicting famine death rates, and adjusted their insurance portfolios accordingly, treating mass starvation as a profitable business opportunity. The syndicate collected life insurance payouts on over 400,000 Irish deaths, while simultaneously claiming crop failure insurance on the same properties. Internal correspondence revealed their strategy. The famine is a mechanism of divine providence to clear surplus population and maximize estate values. They transformed genocide into the most profitable insurance operation in history, accumulating wealth that founded several major British banking dynasties. While Irish families died in ditches, the syndicate calculated the precise monetary value of each death and celebrated their unprecedented profit margins. If this surprised you, The next video goes even deeper.